Good morning, everyone. Welcome to the On Time, On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. Welcome to Friday, July 2nd. Again, still in Vegas. You can see from the background there. And of course, Allie's team starts their national competition run this morning. And they're the 7th seed out of like 96 teams. So kind of excited to see, how all this plays out for them. So this could be the chance, right? But you never know. We see it. That's why they play the game. So, but they should be able to get some good wins in today and tomorrow. Sunday is when it starts really getting difficult, if you will. And then, of course, Monday is will be the final run in the gold bracket. Hopefully, knock on wood, that they're in the gold bracket and get to make the run. So, exciting news there. Got a great show for you this morning. We're going to talk about DIDI Stock, DIDI. It had its IPO Wednesday afternoon, and much like Coinbase, what did it do? It rolled over on the first day of trading. It IPO'd at 1645 and ended up down, in the 14s there for a while is where it closed. And then day two, what does it do? It runs up about 18 to 20% yesterday. I can't remember the exact number, but basically gets all of that back and more, even touches 17 for a while, $17 that is. And then we wake up this morning and it's all gone again. Now it's down. It's sitting at 1468 right now. So what in the world's going on? We're going to look at that chart. We're going to talk about whether it's a buy, sell, or hold. And we're going to talk about what our game plan is for a DIDI. We're not going to talk about Krispy Kreme. Some folks have asked, but not really interested in the donut maker. It's almost a sin stock with all the sugar, sugar elements, but not really interested in it. So it's not going in the book on my account. And there's been a couple other IPOs this week. LegalZoom was tempting, but not something I'm going to put capital behind. With all of them, I think the DIDI is the best. So that's why we were in it. For our question of the day today, we're going to take a look about what is the annual gift tax exclusion and what you have to do. Again, it's $15,000. It's the amount of money that one person can transfer to another without having worry about tax implications. And again, what most people don't know is if you trip over that, which you can, you just have to fill out a simple tax form, and it gets subtracted from your eventual estate when you pass on. So if you're if you're doing this in your 40s or 50s, you could have another 5 decades hopefully, right, before you have to worry about accounting for your lifetime gift exclusion, estate tax situation. But it's very easy to do. Where most people get in trouble, honestly, is if they buy a house for their kids and they don't account for it. Unfortunately, that's a pretty easy one for the IRS to know about, right? And they probably aren't going to catch it until the kids sell the house, right? So, but anyway, that's neither here nor there, but we're going to talk about that this morning. For our longs and shorts, look, I don't like any of them this morning. I will probably call a trade. I may not, though. I don't like any. There's low volume. Every time going into these big 3-day weekends. So as a reminder, Monday's market's closed. Every time you go into a 3-day weekend, the what I call the varsity players in the space, of which I'm not one, trying very hard to get there and get rid of my JV varsity and get onto JV jersey, to get on the varsity team here, which is again right around 100 million for most firms. They take these days off, right? So, or they're done by noon, but they're certainly not doing much trading. They're going in, doing some administrative work, and then getting out of town for the big weekend. So that's why it's so hard to trade on these pre-holiday weekend days, because the volume isn't there. So it's hard to get it in and out with a couple thousand shares without actually adversely affecting the stock. So that's what we're going to look at today. Thank you so much for checking this out. If you like what you're hearing, make sure if you're catching us on replay, thanks for that. Go ahead and click subscribe and hit the notifications bell so you know when these go live every day, again around 9:30 Central. If you want to join us live, what you don't see is a chat window and a Q&A window so folks can ask me questions. And with that, let's go ahead and get started. All right, welcome back, everyone. Here is the lineup card for today, Friday, July 2nd. Futures are in the green. I don't expect to rip your face off Friday, but we certainly did get a fantastic jobs number this morning, which, of course, that's always helpful. when you get a good print like that. But we'll see. So far, so good for the day, the week, the second half of 2021. All right. Here's make sure you have your call sign in there and your chat window and your Q&A window set up appropriately. Standard disclaimer applies. You have to do your own due diligence before acting upon anything you hear in this presentation. This is a financial education presentation, and full disclaimer is available at ototnow.com. All right, mission objectives, as always, excuse me, grow our money, protect our money, live off our money. We're talking about growing our money today with a speculative stock, which is an IPO that just came out, and that's DIDI. That's the, if you're not familiar, it was Wednesday's show. You can go back and watch that one to kind of get the groundwork. But to summarize, we're in DIDI because they are the Chinese Uber, if you will. They've also spread out, I think, 14 different countries. But it's a ride-hailing service, just like, you know, Uber, Lyft here in the U.S., and the stock has been all over the map. After 48 hours of trading, again, it was, you know, it opened higher out of the range. It's supposed to open at $14. I thought it was attractive at 14. It opened at 16 and a half. I made the decision to put most of my clients in either at the IPO or shortly thereafter. That turned out to be a terrible entry point because the stock cratered. I could have had it a lot more. I did buy some more down in the 14s. I will be buying more today, mostly for folks that don't have it. Not really ready to go, you know, doubling up for everybody who got in. But I might add a little bit. If you have some spare change left over in your account, I might add a few more and you know, reduce your cost basis in DD. But yeah, I'm a buyer here. I believe the long-term thesis. Short-term, you know, I mentioned to one person on a text, you know, it's like, hey, bad entry on DD. It's like, yeah, the stock cratered and I'm glad it did. And what I meant by that, I didn't really explain my thought, is because once it craters, then you can actually get a better entry point or even average down a little bit. Certainly, I'm doing that across the book. Individual clients, depending on their situation, may or may not be able to do that. But that's why I say I hope it does, because I don't really care where it is the day after the IPO or the day 2 days after the IPO. I care where it is in that 6 months, 1 year, 5 years point, and I think it's going to be much higher. So we'll take a look at the chart and I'll give you my thoughts on that. Again, we're going to talk about the annual gift exclusion after we get through the market stuff. For the flow today, long, short, open, short, long, we'll do a market review, headline review, look at the DIDI's chart. Again, not much to look at, but again, we'll pull the chart. We'll get into the short-term execution, which again, I'm not optimistic about having anything easy today. So trade at your own risk is what I say to folks. Contingencies and academic resources are standard. Let's go ahead and take a look at TD Ameritrade ThinkPipes platform, which you see here. You see 3 windows, excuse me, across the way. You have SPY on the left, you have CTXR, and then I have DD pulled off on the in the right. I don't really think you can trade DD. I mean, if you're going to, I'd have to imagine it bounces here, so you just take DD long. But again, it's more of an investment. You don't really want to confuse investing and trading. And certainly DD stock is a short as far as our standard setup philosophy. So that which makes it, you know, common sense tells you it's going higher. The trading mechanism that we use, our specific strategy, says no, it's going to sell off. I don't know, just I wouldn't touch it, but it's going to be interesting, worth watching today. The good news is it'll move. If you were an options trader, you could use a collar or forgot the name of the other one. But anyhow, knowing, thinking that it's going to move, but that's pretty advanced. We're not going to go into that today. All right, where are we with the market? New highs, new highs, new highs, new highs. It's what we do. 2021 continues to turn out to be a great year. Again, with the fantastic jobs number this morning, the market's going to power higher. A lot of good, feel good into the big 4th of July weekend. So that's what we've seen so far. You pull the 5-day, there's the SPY. Pretty much straight up, hitting new highs in the book. Hopefully your accounts are bouncing off of new highs or close to it, depending on your individual holdings. Again, Chinese stocks have weighed on things. So Alibaba and KWeb and now DIDI have been the challenge, right? So some negative headlines are out. So I think it'll turn out to be a long-term fantastic entry point on these stocks. So I'm loading up, but that does affect performance in the short term. You know, in the tech space that we go for periods of selling off, and then there's that correction where they really jump, kind of like you've seen with Luck and Coffee. I mean, it really moves higher when it moves higher, so you have to be patient for that. There's almost no way, honestly, to time that. You just have to realize when you get into left for dead names like Chinese stocks, you have to be patient, and then eventually they pop up, and then you're happy, right? But if you're not in them and they pop up, then people want to buy them. It's like, well, you just missed the pop, right? You want to get them before the pop, right? So anyhow, that's what we try to do with what we're doing for our portfolio management. All right, let's go over to Google Chrome. We'll check the futures here. Refresh these for you. You can see, yeah, pretty good numbers across the board here. Not sure I want to do that. There we go. Should be looking good there. All right, going around the world, let's check Europe. Yeah, slightly in the green across the board. Not significantly, though. All right, Asia got 2% drops in China and Hong Kong. Looks like they're saying it's tied to oil. We'll check oil here in a second. Bonds, again, I'm in the middle of a refinance myself now. 2.875, can't really beat it. I'm helping a couple of clients through it as well. So it's not too late. Yeah, Iron Butterfly Connor, I'm looking in the chat. Makes you want to use what you don't know. I will say that I still get hit up by options traders. I mean, it's pretty sexy, if you will, as far as what they do, but I'm not sure. I think they sell their courses. If they actually made money, they wouldn't be doing that. All right, here's our oil dropping slightly. Gold and silver up 1% and 2%. So a lot of love there in the crypto space. Not a huge movement that we've seen lately. All right. Tesla had a bad print this morning as far as their number of deliveries. There it is. Delivers more than 2,000, but it missed projections. That's what you're not missing there. Okay, China announced a cybersecurity review of DIDI shares, so that's what's getting hit. That would be your headline to take it short. I think it's just a buying opportunity. It's a cybersecurity review. Let's not everybody freak out, but certainly some people are. All right, 850,000 jobs, better than expected. I think it's like 100,000 better than expected. So again, the economy continues to rage open, and you have Virgin Galactic, surging 22% after a negative headline. So a lot going on there. Again, I wouldn't touch that. The space race, not going to put. I know it's going to happen. I just don't. Not going to put money behind it right now, at least. All right, let's go ahead and get set up for the market open. I will be right back. Good morning, everyone. Welcome to the On Time, On Target Morning Brief. We are, on time, on target play of the day. We're about 5 seconds from the market open here on Friday, July 2nd. There's the opening bell. We have CTXR set up as our short. You can see it's already down 10%, a very tough trading point. And again, not a huge amount of volume there. And then we have DIDI, which has been in play. Again, the thesis here for our trading plan would say to short it. I just don't know how much further it can go down. So I'm not shorting here. It's already at that 10% move down. If anything, I think it flips and goes long today, but I'm not trading. So just consider that's what I think is going to happen. That's not based on any known strategy like we normally trade off of. So CTXR has already gone down. It's 10%. So not going to trade that. Let's take a look at the other short, WTER. Again, Alkaline Water Company, the headline here. Again, down the penny stock range, postponed earnings. So I would say this is your better short, except for you just don't have much to go off of. So if you were going to scalp trade this, you're going to end up using about a 4-cent stop. You can't even use a 4-cent stop because this thing doesn't have 12% to the down, or 12 cents to the downside. So you'd have to use like a 2-cent stop, which is just insane. So we're not going to do that. But if you had to use a 2-cent stop, if you have to trade something, trade it short. You might not even be able to short it. Take it here at $1.50, put a $1.52 stop in, and then go from there. All right, so let's watch DIDI here all the way down to 14.6, turn around and it flipped. I honestly think you got to take it long here, but hopefully that's not just me thinking long term, but it is. That's why it's so hard to trade here. Really no idea, but if it stays in the 14s after the market open, I'm a buyer long term. So we shall see. The last one I had for you, I again didn't like it, was job long. Pretty weak headline to go with this, but they are gapping up 5%. And you see the pretty low headline or low volume here, excuse me, a couple 100,000 shares. So pretty, almost impossible price point down there at 0.6. Other than that, nothing's really moving. So let's check out. I say that. It always makes me concerned here when I put in Luckin's ticker. Hold my breath, ding. Hey, it's up 27 cents. I like that. So you never know how this is going to go. It's not too late to get in on Luckin. If you have plenty, then just don't buy. You don't need more for sure. Plus, you don't want to ruin your price point, right? You're down in the small single digits. 202 is my personal price point. So 11.6, that means 500 plus percent to the upside. So 11.35 is where it opened. It's up at 11.72. Looks like it's power and higher, so we'll keep an eye on that. DIDI, again, power and higher. Maybe let's check KWeb. And KWeb's down. So not everything China is up. Let's check BABA while we're talking China, and BABA's, that's one of the largest holdings of KWeb is Alibaba. So it's getting hit as well. Again, long-term chart on, BABA's over 300, down around 200. It's just a steal right here, but you are going to have to be patient. When I put folks, when I'm explaining especially to new clients, it's like, I'm going to put you in Alibaba, but you have to just relax because this thing's, I don't know when it's going higher. I can't tell you it's going to go higher soon. All right. Yeah, as far as the space, I see your comment there, Apex, but you're right. The company's going bankrupt along the way. I think space travel is going to happen. I think obviously when you have billionaires, Bezos, Branson, Elon Musk throwing money at it, that's a good thing for society, right? And they're not going to go personally bankrupt. Well, it certainly won't be profitable yet. That's going to be profitable long term. Donut, is that Krispy Kreme, I assume? I don't even know their new ticker, DNUT. I got a yes. Yeah, Krispy Kreme. Yeah, it certainly meets the criteria. Let me actually switch here. Okay, NCY, and put it on the other chart, and I'll show you what I'm looking at. DNUT. I want to back the chart out to capture yesterday's move. Again, it just opened. So opened down at 15.5, peaked out at 22. So gosh, what's that, 30%? If my math is right this morning, in and selling off kind of back into reality, if you will. It certainly meets our criteria, but what's the headline? The headline or what's moving the stock down? Probably the only thing moving the stock down is that it went up so much yesterday. So that's a fill the gap strategy, which some people use. I'm not a believer in a fill the gap strategy. I'm a gap and go person myself, meaning if it's gapping down, I think everybody know donuts are unhealthy, right? When people were asking me ahead of it, it's like, are you getting it on Krispy Kreme as far as the IPO? And I was like, no way. I mean, it's a Sen stock in my mind. Throw it. Coke is even a Sen stock now. And I'm not the healthiest person, but I do at least pay attention to it. But I do know that the younger folks out there are all about this stuff. So we should see, give them away in the casinos. Oh my goodness. We did hit the Caesar's buffet, the Bacchanal, if you've had that before, and loaded up on a bunch of sugar. So I'm sugar complete for about a month, if you will. All right, let's take a look at what's going on around the big picture for long-term investments. All right, that's an Apple call here. So obviously Apple's up if the call's up. Clickstream up 6%, luck in there on the leaderboard. Sony's been kind of left for dead. We were in it for a while for the PlayStation 5 release through Christmas. And then it kind of faded after that. I still have some of it. Zoom, we haven't talked about it forever. Palantir got hit the other day, so that's simple bounce. Trade Desk is one of my faves. You know that. It just did the split not too long ago, so it's still bouncing from that. So a lot of names up over 1% on this Friday. Just looking for Apple. There's easier ways to find it, right? Just do that. Okay, Apple up, 0.75%. Really, when you look at this chart, so this is a pretty good move. 133 up to 138. What's that? 4% in a week. That's pretty good stuff. I like that move. Apple's starting to get some love. And you know what? It happens all the time, right? Apple's left for dead during its quiet period. But now that we're in July, guess what's coming up soon? You get a gold star if you said iPhone 13. That's right. They're going to start leaking more and more of how awesome the iPhone 13 is, and it's probably going to be awesome. They tend to not miss with their iPhones. Some of the other stuff, okay, key tag finding, maybe, I don't know if that stuff will take off or not, but that's how they, their phones don't miss the mark. So that's what I would expect to see again, that the stock will run up in that. Okay, DIDI, only off 7%. Really, when you look at that, means it's bouncing. So here's your, nope, that's a donut on a 5 minute. Let's go back to a 1 minute, and let's go back to DIDI. See how much it's bouncing here. So yeah, that's, I think we'll see it higher. I think it closes higher than 15 today, but we shall see. All right, back to checking else. What is selling off? SWBI. They just had, Smith & Wesson had a huge move up yesterday. So just a little bit of a break from that. AMC, meme stock. Clover Health, meme stock. We don't talk about Dig and Dug, but if you want to, I'm not a commodities guy. I have no idea how to, I don't have no special insight on how to trade things and stuff like oil. And I don't pretend to. So if somebody approaches me about that, I'm like, you can do it. Dig means oil is going longer. It's a levered ETF. Dug means oil is going lower. Again, it's a 2x levered ETF. I don't generally recommend these things, but if you want to play a certain theme, in this case, the theme for Dig is that the economy is exploding open. We're all going to get out in about the summer, and we're all going to travel. Therefore, that's going to cause supply issues on gas, and the price of gas is going up. Don't know. I don't necessarily buy that thesis. I mean, I understand why you would think that, but I don't know if in mass America could move the price of oil. I don't believe that. For the sake of this investment, I hope he's right, but because I don't really care about the price of oil on a daily basis. Even for driving, it is what it is. It's an expense. You just pay the current price and move on. Is my thought. But all right, so there's back to the longs again. Clickstream and Luckin leading the chart there. Let's just look at Luckin real quick, because I like looking at it when it's green, and when it starts a week, you go at 8.5 and it's at 11 now. That makes me happy. All right, let's back out of this and talk about that gift tax exclusion. I will let you go for the 3-day weekend. Thanks again for joining me here. All right. So the annual exclusion, again, is $15,000. So it moved up in 2018 and it stayed steady, and it's probably going to be there, I don't know, for a while. 15,000 seems about right. So what does that mean? Well, for most people out there, when you're giving gifts to your kids, which usually this is a gift giving to children, when they're smaller, you're not probably giving them over $15,000, right? And even when you buy a car for your, say it's a new driver, that 16, 17 time frame or age, you're really probably buying it in your own name. I don't know anybody that's buying it in their kid's name, or even if you can, because they're that young, right? So that's not a gift. If you buy it in your own name, then it's not a gift. Now, what's going to happen? I'll talk my own personal scenario. We did buy Allison a very nice car. It's over $15,000. Again, it's sitting in my name right now, and at some point, there's every intention of her to keep that until after she graduates college. Knock on wood. Hopefully, there's no accidents or the car doesn't die or whatever. Eventually that'll become hers. But by that time, the depreciation, I'm sure it's going to be worth less than 15,000. 5 years from now, and hopefully, knock on wood again, she's a college graduate, or but by that time it's going to be under the exclusion, so I can really retitle it to her without any thoughts whatsoever. Now, where you really get tripped up with is if you're giving to adult kids, which is that's the last situation I'll talk about. So when they're kids, generally, even though you're spending tons of money on your kids, that's not really the point of this, right? That's consumption expenses for the most part. Then when you get to, if they get married, and say in their 20s or 30s, which is kind of your traditional time frame for getting married, maybe you buy them a house. Well, there you kind of have to get in, are you co-signing the loan? Because that's not buying them a house. But if you literally buy it in your name and then retitle it into their name, that's a gift. And the IRS is going to, per the tax law, you now need to fill out an extra form, which I'll scroll down here and see what it is. And so I think it's honestly a one-pager. And it's not popping up, or I'm looking past it. If you happen to see it, put it in the chat there. yeah, all you do is fill out a form and you get that subtracted from your gift tax. Buy them in tent in Austin. Yeah, it's no kidding. The prices here are kind of crazy. But yeah, so there's a way around it. You simply have it taken off of your lifetime gift exclude or your estate tax, which again is sitting at 11 million, 11.8, I think, or 11.9 maybe. Now that could change, right? And that's what you don't know. So say you do a gift tax exclusion now for $250,000. Say you buy them a, you know, I don't want to say starter home, that might offend some people, but at least where I am and sitting in Austin, 250 is going to get you kind of into that single story, 1,800 square foot, you know, type of home. And you go, okay, well, I'll fill out the form and subtract that off because really 250K as part of 11 million is not much, right? It's who cares. But if the estate tax goes, by the time you pass away, the estate tax goes back down to $1 million. Well, now you've, you know, that's 25% of that. I generally don't don't outthink that stuff. Just do what you need to do to get through life and pay the taxes on what you end up getting hit for in taxes. You can cry about it, you can get emotional about it, you can get excited about it, but none of it matters. You just it's an unknown. You do not know what's coming. You can be, you know, try to predict it, be smart about it, but you can't beat yourself up if you don't see something coming. So anyhow, so that's the second one, is buying of a house, which is a little bit tricky. The third one is once you are what I would call not only financially independent, but rich where money might be a problem. I would say for most folks, that's around the 5 million and above level, where now you are trying to, you know, one of the strategies is, hey, $15,000, you need to give away that amount of money every year to basically everybody in your family. Now, if they've upset you, then don't give them money. But assuming you have a, you know, functioning family where you have good relationships with everybody, now it's try to get money out of your name into your family's name over the years. And you can do that through gifting it into, you know, trust for minors, a UTMA account. You can put it into their 529 accounts, adult accounts. You can just outright gift it to them if you want. But generally, I wouldn't get into that strategy until you're around the 5 million and above. Volunteers to be a recipient to help people avoid taxes. Yeah, appreciate that, Apex. All right, that's all I've got for today. Again, we had a really good week this week. Market is powering higher. Again, powering higher today. Again, we'll check the futures here real quick as I conclude. So a lot of good feelings. And again, what are the headwinds for the second half of 2021? It's inflation and taxes, which nobody's talking about right now. You know, in earnest, nobody's talking about, but it's coming. So, you know, enjoy this while it lasts. Enjoy your weekend, and we will see you back bright and early on Tuesday morning, still from Vegas again, but then you're flying back home Tuesday. So, all right, with that, you guys enjoy your weekend.